Okay, this is John speaking. I'm going to cover off for you a common question we get asked in this industry called, well, what is redundancy cover and how does it work? Now, what's really important is that you understand the key differences between income protection and redundancy cover. Now, redundancy cover is not income protection and vice versa. Redundancy cover is what it is, and it covers you for redundancy claims only, nothing to do with illnesses. So with the stand down periods, you'll quite often see that it's got a 6 month stand down. The reason why they have this is to protect the insurance companies for people that know the company they're working with is going under. So it doesn't mean that once you've got a claim you need to wait 6 months. It's only there at the time of the policy being issued. So it's a bit like a membership fee. You can't do anything for the first 6 months, but after that you're fine. So it can usually be added on as income protection or mortgage repayments. And when I say that, it's an add-on that majority of, well, probably about 5 out of the 6 insurance companies offer. There is only one that'll offer it as what we call standalone, so it can be taken out on its own. Usually it's taken out in conjunction with those two products here in front of you. Some other key points is that, how different is it than income protection? Well, income protection is what they call is medically underwritten, whereas redundancy insurance is not. So, the points of claim are very different. If you got made redundant, you couldn't make a claim on income protection because it's nothing to do with an illness or an accident. Um, we, we do get the odd call from people saying, "Look, my company I'm working for is going under. Can I take out some redundancy cover?" Of course you can't. Now, to think that you know, if there was a murmur of restructuring, as an example, in the industry that you work in, and particularly if you're a publicly listed company, all the insurance companies kind of read off the same page and they gather a lot of data. And so the minute a major company announces that there's a restructure, up pops a red flag, and that company that you're working for um, will be blacklisted for a period of time. And I think it's about 12 to 2 years. Don't quote me on it, but it does get blacklisted, and therefore you won't be able to get redundancy cover working for that company. And again, the stand down periods are pretty much the same across the board. 6 months is the standard. Now, there is one company that does offer redundancy cover and only has a 1 month or 30-day stand down period, but the level of cover is less. So again, how does it work? Well, you can insure your redundancy amount up to 40% of your income. So if you were earning $200,000, unfortunately you're not going to get 40% of the 200,000 because it does get capped at 5,000. That's the maximum any company will go to, and the one that offers the 30-day stand down period only offers you half that amount in cover. So the qualification to setting this up is you can insure, you can use your mortgage repayments as an amount, or you could use your income. Now, a lot of people would say, well, what's the difference? Well, you may be married or have a partner that earns an extreme amount of money, and you may be on a low income bracket. Now, what you could do is use those mortgage repayments as linked into your have mortgage repayments, and then link that to redundancy cover. That's just a little tip and something you could do. So, is it age related? No, it's not. It's definitely not age related. So, it doesn't matter how old you are, it doesn't affect the premiums. And that's very different with income protection, because income protection is related to your age, occupation, and income. Whereas redundancy cover is just about your income only. So, not all the insurance companies offer this type of cover. Again, as I said to you, there's probably about 6 of the main companies, of which 5 offer the pretty much all the same, and only one offers the cover where you can just have it as a standalone. So probably the most important outtake of this presentation is to remember you cannot make a claim within those first 6 months of taking out the cover. So look, if you want to know more about it or you have any questions, feel free to give us a call on the 0800 number, and I'm sure they'll put you through to a registered advisor that can help you.